Meta has been one of the top stocks bought over the last couple quarters in Q3 and Q4 of 2022. Many super investors have been buying in, so we're going to go through and calculate intrinsic value for this company, and we'll be using a spreadsheet that I've made, which will be available in the description below, and we'll be doing this with free tools. So as a quick primer, many of you know, Meta is the holding company for both Facebook and Instagram and WhatsApp, among other companies, and they make their money from advertising, among a couple other sources. But today we're just going to be going over the intrinsic value using a discounted cash flow method, which basically looks at what are the future cash flows that this business will generate and how much is that worth to us today. All right, let's get to it. Here's our discounted cash flow valuation template. As a starter point, we will enter our stock ticker, but before that, I just want to say if you want to use this on your own company, I'll have a link in the description. You can just go to File, make a copy, and add this to your own Google Drive. Also, below our data points and inputs, we've got little bits of text that will direct you where to find this information, and we're going to be using that information in this video. So follow along. We're going to note the stock ticker just to show us what company we're analyzing. This is Meta. And then our first bit is going to be gathering data on the past growth rate. So you're going to go to Yahoo Finance, go to the Meta page, and then hop over to Analysis, scroll down, and find growth estimates. We've got 7.22% for the previous 5 years, 7.22% growth per year. First data point. And then for the next 5 years, the estimates are, again on the same page in Yahoo Finance, Analysis, growth estimates, 3.63%. There. And then next we're going to go for years 6 to 10. So the next 5 years of growth. Now this is not provided in Yahoo Finance in those estimates. So we're just going to look at the difference between the past 5 and the next 5 for growth. We see that as being 3.59% drop. So we're just going to apply this difference to the next 5 years growth for simplicity's sake. And that brings us to a growth rate of 0.04% for years 6 through 10. Next up, we've got discount rate, which if you've seen previous videos, you will know that this is basically our desired return, and it's the interest rate we are applying to future cash flows to discount them back to present for what they're worth to us today. If that didn't make a whole lot of sense, be sure to check out those other videos, including ALIBABA Intrinsic Value, where I go into this deeper, and the Intrinsic Value Explained video. So we're using 10%. Next up, we've got business quality multiple, anywhere between 10 and 15. Lower quality businesses will apply 10, higher quality will apply 15. This comes from the Dhandho Investor, where Monish shares how a free cash flow event can be created in year 10 if the business is sold. And these are the values he uses for low versus higher quality businesses. We're using 15 as Meta has consistent earnings, and a company that might deserve a 10 could be, for example, an auto manufacturer where they will lose money in some years, earn money in some years, and oscillate back and forth. So next up, we've got our free cash flow. We're going to hop over to Google and type Meta free cash flow. Select that first option for macro trends, and that will bring us to this page where we've got our free cash flow in years 2020, 2021, and 2022. Now, this gets a little trickier for valuing Meta as free cash flows tanked in 2022. Now, if you've been following Meta, you know that Zuckerberg has been investing heavily in the metaverse, and there hasn't been a whole lot of ROI up to now. So numbers were growing and then they tanked. So for this valuation, we will just choose the previous 12 months, so years 2022, previous 12 months. So we're going to be using the 2022 free cash flow. Bring that number over to our template. And then we've got excess cash. So if we're buying something and it has cash attached to it, it's basically free money. So we're going to be adding this on top of our intrinsic value. Another way of looking at this, the future cash flows of the business discounted present don't account for the money that's already on the books. So we add that on top of intrinsic value. Go back to Yahoo Finance, go up to statistics, come down to balance sheet. The most recent quarter, there was about 41 billion. So we'll add that in the spreadsheet. We've got our intrinsic value of 310 billion based off all these estimates, all these inputs, future free cash flows, and our selling event at year 10 of 15 times year 10 free cash flows. Top of that, we've got our margin of safety, which helps us to take a haircut off intrinsic value and demonstrates how, as value investors, we are not willing to pay the full intrinsic value. Another benefit of this is if these things do not go as planned, having a margin of safety and being willing to buy lower than intrinsic value benefits you so that you can either reduce losses or you can still earn a healthy return if what you were expecting does not actually materialize. So now to see what we think of Meta right now as a buying opportunity, we will compare current market cap to intrinsic value market cap. Hop back into Yahoo Finance, summary tab, and we've got our market cap of about 442 billion right now. So with this setup, we've got intrinsic value of 310, market cap of 442, and that shows it as currently being about 43% overvalued with our current assumptions. So currently it doesn't look super attractive with what we've gone through. A couple things that I will note though, in our free cash flow estimate, we chose year 2022, which seems logical. But things have been a little all over the board, so it's a little hard to locate where we believe the future cash flows will grow from. Another thing is, if we look at the previous year, Meta hit $88 a share. It's currently at $170. It's not quite half, but that's roughly half. So if we chop this number in half, 440 divided by 2 lands us at about 220 billion. Now 220 relative to these would give us a margin of safety of about 30%, which is a lot more attractive. Hopefully this process of calculating intrinsic value was helpful. Thanks for watching, guys. If you got value from today's video, make sure to hit like and subscribe to stay up to date and learn more about investing through the stock market. Also, let me know what kind of topics and videos you'd like me to make in the future so I can best serve you guys and we can keep learning how to earn through investing.